They get their life insurance all directly through their employer. But in reality, they don't own any of this. A bank gives you 0.05% return on a savings account versus an insurance company, you can get 5 to 6, 7% returns just off of your premiums that you're putting in. What they don't understand is that as they get older, the only thing that's gonna go up is the cost of life insurance. It's gonna continue to go up year after year after year. Why not do it now instead of waiting till when you're getting older? Now you're on a fixed income, trying to make a payment that's 3 to 4 times what it would have been if you were younger.
Ian, how are you today, sir?
Doing well, doing well. How are you?
Good. If I was any better, I'd be you, man. No, Ian, I wanted to bring Ian on the show today, guys, because everybody knows you as Ian the Korean. However, in the insurance industry, a lot of agents know Ian as the product and service expert between both health and life insurance. Now, Ian, what made you become the expert to so many agents? Like, how did that come about where you took on that role to be that go-to guy that everybody reaches out to? Even apart from me, everybody comes to you before they even do me now. What happened? What changed in your career to make you want to step up into that leadership role?
Dealing with sales, I pretty much came up through door to door and went into corporate America through telecom and whatnot. It's always been something that I really enjoyed, is one, being able to teach people all the different products, making sure that they know, what they can get out of it, how it can actually benefit their clients. So it's important to me that they will know all the information. So it was important to me to be able to obtain all that knowledge myself, so that I can pass it on to other people. As far as myself, I've always been a very, I guess you could say, nonchalant kind of person, very monotone or whatnot. And it really didn't exemplify with my clients.
Yeah.
And the best way that I could go about this is, making sure I help my clients is making sure that they're educated to the best of their ability, the best way I can do it for them. And the best way that I can do that is by knowing every in and out of every single product that we offer. And that way they know exactly what they're getting. They understand what they're going to be getting in return, and how it's actually going to work for them, how it's going to protect families, or how they're going to be able to use it, when they get hurt and they're going to the hospital, or anything of that nature.
Yeah, I agree, man. Everything that you said. One thing a lot of us noticed about Ian, and just so you guys know, Ian actually joined me last year into this business. He actually moved out to Texas, moved his entire life because I showed him an opportunity that I was able to have some success in. And he was able to relate because before I had jumped into the insurance industry, Ian and I were both in the telecom industry. So we had a lot in common in that sense, plus we were friends a couple years prior. Now, one thing I noticed about you, Ian, and the reason why I think you took that role is from day one, you were a sponge, man. Like, all Ian did was come and sit right beside myself and other top agents in the country and just shut up and listened. That's all he did from day one. He took notes and then he immediately implemented everything that he heard. And that was one thing that we noticed. And in our industry, like I said, we call it like you're a sponge, man. And I truly appreciate you being that type of individual, especially to all of the agents that we have and that we're currently onboarding, and for future individuals that are watching this show that might want to see what this opportunity entails. Now, Ian, I want to ask you, man, there's a lot of misconceptions in the insurance industry, a lot. And I can't stress to you enough how important it is that we let everybody know some of the answers to these questions that everybody asks. The first thing I want to ask you is, why is life insurance important?
It's super important. Main reason, obviously, you want to protect your family when something happens to you. You want to make sure they're in a good place, whether it's financially or whether they need to have time to mourn your death or anything. It's just important just for that sheer factor. Now, there's also health insurance. You want to make sure that you're going to be able to, cover your bills in the case something happens. Know that the insurance company is going to cover you. And also make sure that you actually have that built-in out-of-pocket maximums or security blanket to know that you're actually going to be taken care of and not have to worry about paying those bills and everything. You actually have a company that's going to pay that for you. So it's super important, just to be able to manage that and also be able to do it all within a budget that's friendly for them.
Yeah, and I will say, it is wildly important. I agree. Now, one misconception that I do specifically want to bring up is a lot of people think they can wait until they're older to get life insurance. They keep pushing it off year over year, sweeping it under the rug. Very easy to sweep under the rug. Why is it important to get it younger? Because people believe that they can just wait until they're 60, 65 years old, and that's when they finally go shopping. But what do they run into when they wait until they're 60, 65 compared to somebody who's, 25, 30 years old?
Yeah, I mean, a big reason for that is because people get these plans through their employers. A lot of people work for corporate America and they get their health insurance, they get their life insurance all directly through their employer. But in reality, they don't own any of this. As soon as they leave that employer, they're pretty much left with nothing. They're starting all over. And so what happens is these young people just pretty much wait till their career is over and they're retiring to get into life insurance simply because, okay, hey, I need to make sure I'm leaving a legacy or make sure I'm covering any burial cost. But what they don't understand is that as they get older, the only thing that's going to go up is the cost of life insurance. It's going to continue to go up year after year after year. And during that time frame of your life, you don't even know if you're going to get prescribed one medication that's going to change everything for you to determine if you're even approved for a life insurance application.
So I want to touch on that. So one medication, Ian, can be the reason why you get accepted or declined.
Correct.
Right?
One medication.
One medication that a doctor might prescribe you that you didn't even know would be a decline. So don't you think that it's very important to at least learn about life insurance at a young age to know all of your options?
Absolutely, absolutely. I mean, the big thing is, one, you're getting in younger. The cost is going to be so little, and you're also doing it at a time where you're making money week in and week out, or month in and month out. You're making money to be able to manage these costs. Why not do it now instead of waiting until when you're getting older? Now you're on a fixed income, trying to make a payment that's 3 to 4 times what it would have been if you were younger.
And so what you mean is there are policies out there that you can get into at a young age, get a locked-in price for the rest of your life, right? That way, when you're 60 years old and you got a life insurance policy when you were 25, you're still paying that same price as if you were 25 years old at 60, compared to somebody coming in right at 60 and paying 4 to 5 times more and running the risk of being approved. That's what we're understanding, right?
Exactly, exactly. And the thing about getting a policy when you're younger, by the time you're 65, you're building cash value off the payments that you're putting in and month out. The insurance company, if you look at them just like a bank, right? They're going to take your deposits that you get from your paychecks every single week. They're going to invest that money into the markets so that they can make money off of your money.
Okay.
Now, an insurance company, they're going to do the same thing, except they're going to invest your premiums, except they're going to give you a much larger return than a bank will ever do. A bank gives you 0.05% return on a savings account versus an insurance company, you can get 5 to 6, 7% returns just off of your premiums that you're putting in.
So much better than the savings account.
Absolutely, absolutely.
And I want to touch on this, guys. Like I have, and what he's talking about is an IUL, right? It's an index universal life policy. And what those policies do, when you get one young, you make a minimum payment. It locks you in for the rest of your life on that face value that you get. Let's say you get a $100,000 life insurance policy and it costs you at 25 years old, it's probably $30 to $40 a month. Right? For a $100,000 IUL, Index Universal Life Policy. Now, what this policy does is it takes that $30 to $40 a month, gives you that face value of $100,000, but over the course of a certain amount of years, it builds cash accumulation. You can then use that money as leverage to invest in other businesses, other things, right? And it's important to understand that too, because that minimum payment stays the same. Now, what's really cool is you can actually double that payment year over year, and your money will not only build the cash value to be able to borrow against it, but it accrues interest at that point. And you can take it out, use it, et cetera, for anything you'd like. Now, let me ask you another question. Let's pivot real quick over to the health insurance side. Now, a lot of people ask, I have employer coverage, right? My whole family's covered on employer coverage. Why is it important for even people that have employer coverage to shop private options?
The thing about employer coverage, by law, they're only required to give contribution to the employee. Now, the employee's family, obviously they need coverage as well. They still provide it to them. However, they may not be giving them any contribution at all. So now they're paying full price for what we call real insurance, which, that can be for a family of four. The rest of the family could be looking over $1,000 just for coverage for them, because that's what the real cost of the insurance is. A lot of people, when they leave employers, they get COBRA packages and whatnot. That COBRA package is what the real cost of insurance is without the employee contribution.
Because at that point, they're not getting that 50, 60, 70% from the employer.
Exactly.
Okay.
And so what happens is the employee and the family's paying what that real cost is. And a lot of times they can go through a private sector and get, PPO plans and whatnot that are underwritten, and still get much cheaper prices in general for the coverage for the family, and that way everyone's still on that PPO plan like everybody wants.
And similar coverage, right? They're
Correct.
not losing anything. Okay.
Correct.
So, and guys, we deal with this all the time. Myself personally, when I first started in the health insurance industry, I was reaching out to my warm market. Well, a lot of my warm market were people that had jobs, really great jobs with huge companies, right? But when I started digging a little bit deeper, I started noticing, well, just the employee, the price of their health coverage was $100 a month. But then for their wife and kids, it was an extra $800 a month. But in their eyes, they were only paying $900 for the entire family. They didn't know how to break it down. They didn't even know what they were paying because it was coming out of their check. So whenever I showed them their actual plan, because I had their HR department send it over, and I broke it down for them, and I showed them, hey, if we take your family off, it's only $100 for you, John, right? But for Mary and your kids, Joseph and Sabrina, we can put them on a plan for $550, right? So now you're only paying $650 total instead of that $900 to $1,000 a month that you thought you were getting a good deal on because it was for the entire family. And when we quantified that value, in most cases, we were saving families $2,000 to $3,000 a year just for making that transition. So it's very important that you guys understand almost anyone needs to get on the phone with one of us and find out about their plan. What's the worst that can happen? We tell you that you're already in a great position and we tell you to stay right where you're at and you learn a little bit more. Or we end up saving you hundreds, if not thousands of dollars a year.
Exactly.
So you just have to be a dummy not to call us, right?
Pretty much.
I rest my case, guys. Now I want to ask you another question, Ian. And a lot of people don't understand this. What's the difference between HMO and PPO?
Well, HMO stands for Health Maintenance Organization. It's a really limited network. It's pretty much going to be within, say if you had a home address, it's going to be within about an hour of that home address. That's where you're going to get your coverage for what they call in-network coverage. In-network coverage is just where you're going to get your discounts, where you're able to go have your payments and everything go directly towards your deductibles and out-of-pocket maximums. But then if you go outside of that, then you just simply don't have coverage. You're what we call a cash pay customer now. So
you're saying if I have an HMO plan and I'm in the county that I live in, I'm all set. But if I go to Hawaii with my family and I get bit by a shark, I don't have any coverage?
Exactly.
So HMO sounds horrible.
I mean, it's designed for, a very specific crowd. Obviously Marketplace was designed for people that are of pre-existing conditions or low income. So not saying that it's just bad completely, but it is designed for a very specific market of people. Okay. And if they have the ability to get a PPO plan, then you absolutely need to take that, and because at the end of the day, PPO, it stands for Preferred Provider Organization. Pretty much, you pick who you you want to go to. I mean, it's simple as that. You get nationwide coverage. You're going to be able to see the doctor that you want to see. If you have a heart surgery, don't you think you would rather go to the best doctor in the country?
Oh, yeah.
Instead of going to a doctor that they tell you have to go to.
Yeah.
So that's why people prefer to go PPO. And this is also typically why it can be recognized as being more expensive. Mm-hmm. However, when you go another route with the private sector, you go completely underwritten. Now you're going into it, if you're completely healthy, you can get access to these plans almost at the same price as what you would get an HMO plan. And a lot of people don't know that.
Yeah, and I've dealt with this a lot too. People, and these are just, the reason why I'm asking these questions, guys, is so you guys get the answer. because a lot of times you have no idea how health insurance or life insurance works, because honestly, I mean, I don't even like dealing with health and life insurance. My entire life, I hated it. Up until last year, my dad suffered a stroke and I was laying my best friend to rest on the same day. That's actually what got me into life insurance, and what got me to push you towards coming into the industry, is because what we do is truly needed. And it's not your job to understand all of this, but to get a little bit of a better transfer of knowledge from us to you guys, I think would just benefit everybody. Wouldn't you agree?
Absolutely.
But yeah, the PPO options, being relatively healthy, being able to get the same type of pricing as a family that might not have taken care of themselves as much as another healthier family, they can get the same price for a PPO as another family would for an HMO, right?
Exactly.
Got it. So, Ian, I wanted to ask you as well, for business owners, right? I just wanted to touch on this. For self-employed individuals, business owners, what are some benefits of having health and life insurance for them specifically? Because the reason why I want to bring that up is, a lot of families are taken care of by their employer, right? But what about the small business owners? What about the self-employed individuals? Why does talking to somebody like us, like our company, Insurance Elevated, or even another brokerage, why is it important to talk to us?
Too many times, small business owners feel like they're forgotten, I guess you could say. Everybody's taken care of, with the employers or low income, but small business owners who strive to be better feel like they're left on the outside when it comes to health coverage and whatnot. Because if you go to the marketplace, it's priced based on your income, and they feel like they make too much money, and now their premiums for a family of four could be $1,800, $2,000.
So the public marketplace, just because I do well for myself, I'm punished on the public marketplace for being a small business owner, making a decent amount of money. So they charge me astronomical prices, but for somebody who, might work at, McDonald's down the street, they're going to give them a plan for free, right?
Pretty much, yep.
Okay, got it.
So the big thing is with self-employed individuals, they do have access to a lot. And that's what we're here to do, is educate those business owners and show them the options that they have as business owners. You do have access to a lot of tax savings. As any business owner, they look for every single way that they can save money with tax deductions at the end of the year. Let's be honest.
I can claim my health insurance, my private health insurance, as a business expense.
You can claim yourself and your family.
So I can write my entire premium off.
Correct.
What about everything that I spend throughout the year?
That's all write-off. Everything.
All a write-off.
So if you have to pay for a doctor visit, if you go get chiropractor visits, if you have to pay money towards your deductible, you got injured, you have to pay money towards your deductible, everything is a complete write-off. Everything, even including your life insurance. That's why it's important to get both. Getting health insurance and life insurance, because at the end of the day, as a small business owner, you're the most important person to that business. You're the most important asset. So because you're the most important asset, that means you're also able to write off protecting that asset.
Yeah, and I don't know about you guys, but business owner or not, self-employed, but the last thing I want my family doing is going on Facebook and asking for money through a GoFundMe if I died. Right? That's just, me personally. I don't know about you guys, but being able to have something in place, being a business owner, you're already pretty savvy with your money, right? You decided to jump into the field of being your own owner, right? Your own business, your own everything, and then especially developing a team, why not take care of your family and leave them the business if something were to happen to you? Or what if you broke a leg, you weren't able to work for a while, and you didn't have health coverage, you don't have life coverage? What does that look like, man? Because I looked it up, and I believe it's 60% of bankruptcy, first of all, is the number one cause, unpaid medical bills are the number one cause of bankruptcy in America.
Yep.
And over 60% of small business owners do not have major medical.
It's true. It's true. It's just, a lot of the times, just businesses, when they first start out, they think that they can't afford the health insurance or life insurance or anything simply because they're first starting, and they're investing every single dollar that they have into the business. You know that, but we both invest everything that we have into this business. But yet, because we're in this business, we know how important it is to make sure that you're covered in every aspect. You know, people cover their phones, they cover their cars, they cover their homes. Why not cover the most important asset, which is their own life?
I completely agree. And Ian, we're going to wrap this up here. So just to summarize, guys, whether you're employed, reach out to us. Small business owners, self-employed, listen to all of your options, see if it fits within your budget, your needs. We'll show you how it can protect your business, how it can protect your assets, your finances. It's a very simple conversation. It's free. We're direct to the carriers. We're not married to any insurance company, okay? But thank you so much for being on, Ian. I appreciate
Yeah,
it.
thanks for having me.